Let's get started with the first part of our webinar. It's all about the foundations of building your own strategy. Could you please navigate us? What steps do you take? What do you need to take into account in order to build your own strategy?
Yeah, sure. So I'm gonna keep it very simple here. This is gonna be a bit conversational. I'm gonna run you through the things I usually put on the table before I get started. Um, and this is not just about my own preference, but because I had a large community of people interested in trading bots. One of the things I learned is how different is each individual as a bot trader, not just as a manual trader. There are people that are willing to risk a lot, and some other people that are way more conservative and they want to take it slow. And initially, my assumption is to put everybody in the same in the same bucket, but actually, everybody's very different. So I think self-awareness is kind of the first step, which is to understand what are you really looking for? What good looks like to you? How does it sound good? What speed? How much of risk appetite you have? Um, and then how complicated you want to go as well with trading bots, because you could do something extremely simple and still effective, or maybe your appetite for complexity, for tech, for integrating, multiple crazy things, is what drives you, which is fair enough. Some people want to integrate AI with Signal, with coding, with, doing so many crazy things that you can do nowadays. So I guess those are the first two pillars before getting started. And then you need to think about the pace and the style of trading bot that you want to run, whether you want to go for something long term. I know very successful people that literally just trade moving averages, crossing, and in a monthly basis. And they enter one day and they let the bot with a single deal run for 3 months, not doing anything. And they're capable of waiting all that time until the deal closes in the next bear cross. And that's it. You can keep it as simple as that. Uh, 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 and you need to be able to stay with the hands not itching to close the deal when it's in profit or when it goes slightly in drawdown.
That's my
That
problem. I'm always like very emotional, and it slightly goes down. I'm just like, oh, do I need to buy? Or do I need to sell? Oh,
Yeah,
it's
yeah,
just
and
this is
and it's
annoying.
it's it's something that you need to do for self-awareness. And for that, I recommend on 3Commas trying the paper trading, um, because it gives you that feeling of that you are doing something, but without necessarily before you get to know yourself, before you close that deal that's slightly enter in a drawdown of 5% or 10%, you just close it, then you take the loss, you realize it, and then suddenly the market starts coming back up. Um, so getting to know that you will react that way and being prepared emotionally is very important. And also knowing, well, this doesn't really work for me. That can be an answer. Maybe long term is too slow, too boring, and I get so bored that I end up making a huge mess. Some
Mm.
other people run from that and then they go into scalping or swing, which is slightly faster. So you have the long term, which has an advantage of being low maintenance. It's like a trend following with moving averages, or for example, during a bull market, buying your assets with an RSI below 30 on the daily time frame or even on the weekly time frame, assuming that you think that we are still in a bull market. Those are great opportunities, but do require you to be very strict, um, and follow, set alerts and things like this, and have a plan written before it happens, because that's the next problem. People set these strategies, and when they get the alert, they say, yeah, I just got the alert that Bitcoin is, the RSI is at 25, but maybe it's going to go to 20. And if it goes to 20, maybe I can buy it cheaper. and then they don't do it. And that's where the bot is kind of having the plan and settling the plan on not just on a piece of paper, but on rock, stone, and then you have to follow it. So that's another advantage of the bots, that you can really put a lot of thinking prior to the events and think, well, if we look at the past performance of Bitcoin in the previous bull run, this happened very rarely, and it usually led to upside with a 95% chances. Wow, there you go. You have an alpha. Therefore, you have put enough thinking, then now materialize it with an automated strategy. Or if you send the alerts to you, you have to be as strict as the bot. But the bot will do it without feelings. That's the advantage. So if you want to look the other way and leave your bot doing what you put so much love and time in thinking, I think that works. But test it on paper trading, because I know so many people that they put the bot, as soon as the bot is running, they install the 3Commas app in their phone, with a strategy that's supposed to do one or two things every 2-3 months. And then they keep checking the phone, and then they still end up clicking on market order, because I'm bored, or because I'm drunk, or whatever. Anything can happen, really. So that is getting to know yourself is very important. Then you have the risk profile. So people are willing to risk different amounts. And if you set a bot, for example, and your bot is minus $100, how do you feel? You need to know how you're going to feel, because once it's minus $100, you need to have a plan. What's going to be my reaction to that? Am I going to let it go into 300, into 500, or am I just going to cut it? uh, Getting to know your risk profile is really going to save you a lot of money. So if you feel too much pain and you're starting to sweat cold with your bots, you're probably trading with too much. Okay, you need to get it small numbers and stuff like that.
Yeah. I think
um,
it's all about, also like understanding yourself and your emotions and your risk profile. And, it's more like inner work with yourself as well, not just only about the strategies.